A lot of familiar faces in the room, but for those of you who do not know me from before, my name is Anders Sjåstad. I'm recently elected as president of the CFA Society of Norway last summer. And that gives me the great privilege to introduce the first research challenge ever held in Norway. In cooperation with the CFA Society of Denmark, we participated last year also with a Norwegian team, and I had the great privilege of mentoring that team. We have two representatives here from last year, Dylan and Damiano, who went on to become the EMEA champions and are amongst the 4 best teams in the world from last year. For those of you who do not know the challenge, it comprises more than 5,000 students from 1,000 universities from more than 100 countries globally, and is the biggest challenge globally of its kind. And it gives, and I'm sure you can back me up on this, it gives the students a chance to put into real life some of these things that you study in academia, and you get exposure to both the hard and the soft skills that you need being a financial analyst. And having experienced or having had exposure to how much these guys had to work last year, I understand how grueling of a task that you guys have gone through this year, and we greatly appreciate all your efforts. Yes. But you're obviously not here to listen to me speak. So I want to give the word to Kim now, so he can give the proper introductions to a panel of judges and the students coming up. But before that, I just wanted to thank all the volunteers and also our sponsors, Belvar, for their efforts, and all the mentors and all the hours put in by Kim here in particular. But we've had a team of volunteers volunteering their time now to make this happen and for this day to be as good as it possibly can be. So if everyone could give some. Fantastic. So Kim, if you want to give us a bit more practical details. Yeah. Fantastic. Yeah.
Thank you very much, Anders. It's a pleasure, as always, working with you. I guess, you have thanked a lot of people. There is many more to thank. Especially we have the faculty advisors here. I don't know if Janis is here, but not yet. He will come. But Thomas, from Nord University, thank you very much. Shirley also, thank you. You are the industry mentor of the BI team. And Morten as well, Gabrielsen from Carnegie, the mentoring role of NHH. We have a great and strong judge panel as well. They're going to introduce themselves later. I must say also this competition, you students are actually here. That's actually, we should thank you as well. So dedicated, put down so many hours in this. I hope you have already got something out of it. Today, it's going to be interesting and a fun day. You're going to pitch your sale, whatever it is. There is a tough day. In the end of the day, we're going to have a great party together and a celebration of your achievement. One of you, actually, is a close race, will be sent after the grading part. So there is 3 graders as well. Louise Gjøring Jev in Denmark, and Arnstein Fjell from Cermaq, and also Helge Nordahl from my team, working as vice president on the analytics sides and associate professor also at NHH, has graded your reports. But it's a close race, so this day will actually you have to show today the differentiator you are. So the written reports were all good. It's a close race, but today is the day. We will announce the winner and send one of you to Dublin for the EMEA regional final. So how does our day look like? And as well also clearly beautiful Elisabeth from Tomra. Thank you very much for dedicating time and resources as well. the students has got to know TOMRA is actually the subject company, of course. Sorry, I didn't mention it. I thought everybody know here, but it's been a great journey we have had together. Thank you very much for your time and dedication and providing also like CFO and to the students and be able to ask questions. So I know you will say some words later in the day after all the presentations are done. So thank you very much. As you see here, we're going to kick off 2:10 with Nord University. You didn't know. Please note your time for the other students. So have a photographic memory. This is a rand F9 in Excel. And ranked, so there is nothing to be read out of these lines of when the students are presenting. It's going to be a tough day as well when you have done. I would recommend you potentially later on, like for the students that has presented, to check in as well. So we have done that so we don't need to do that afterwards. I guess in particular, so we're going to crack on with Nord University. 10 minutes. Presentation followed by 10 minutes questions from these presentation judges. It's an intense session. Later on, like 4:45, we're gonna have some words from Elisabeth Sandnes at TOMRA, and also we have Tillen and Damiano. Thank you very much for taking your time, and they will just let you know some secrets, the secret sauce, what we call in CFA curriculum, of what you need to know for the winning team and what is awaiting you at the EMEA final in Dublin. Feedback also, we will like to just have 10 minutes with you. What has worked, what didn't work, what could be improved along these lines, so we can make it even better next year. And we will announce the winners down in the reception. More about that later after you all are presented. And we'll have a formal dinner afterwards. Yeah, okay, yeah. So we must, Ellen as well will show you around. This is a great venue to be in, fantastic. So thank you very much for facilitating. And so Ellen will show you around. I guess we can go from here like 5:30 for those of you who want to see the venue. And then we're going to meet at the reception afterwards at 6. So for those who don't know, this is actually what the judges are looking for today. So there is 6 different topics with different weightings. So the financial analysis and valuation part is, of course, a huge part of what you have to deliver on today as well, as you did in the written report. Presentation is a great thing, and team involvement as well. And the questions as well, which you couldn't actually prepare, is 20%, and the materials as well. So they're going to sit down and do their work, and we're going to see who is the winner in the end. I guess I will hand on to the presentation judge panel to just give some words about themselves and where they work and what they do.
Hi, I'm Mikkel Nyholt, working with Carnegie as an equity research analyst, and I cover the industrial sector, and among them, TOMRA. And I currently have a buy recommendation.
Thank you. My name is Audun Nordtveis. I'm starting as an analyst at a family office, Sol Invest, after Easter. I recently resigned from my position as an industrial analyst at NBIM, and I'm looking forward to hear what you have to say about TOMRA.
I'm Daniel Patterson. I'm the Copenhagen judge. I work at SEB Investment Management, where I'm the head of our Danish equity investments at SEB. I used to be a research analyst, but I have never covered TOMRA, so you're safe there. Unfortunately, I need to catch a flight around 8 o'clock tonight. I will be around for drinks, but I won't be here for the dinner. So just so you know up front, if you want to connect, I'm on LinkedIn, and just reach out. Otherwise, I'll try and be around for drinks and available for questions and ideas.
Yeah, good afternoon. I'm Anders Holte. I'm from Danske Bank. where I head the oil and gas equity research team. I do the oil price forecast. I cover all the oil names listed in the Nordics. I have yet to have any coverage in the industrial space. However, I have delivered presentations to clients now for 5.5 years. And as this challenge explains, this is about presenting your case to what would be a buy-side team. So wish you the best of luck. Look forward to your presentations.
Thank you very much. Thank you. It's just some more formal things. Time management is everything. So Yini here on the side will be very strict. She's very polite and pleasant usually, but today she will be strict. So she will shout out when 10 minutes are gone, and then also when the questions are after the 10-minute session on the question side as well. So very important, don't hate her. You will learn to know her better during the dinner. And for the audience, I will just remind you to shut down your telephone or put it in the silent mode. And please don't leave during the session and presentations. And also be silent and objective as well. Janis, thank you also for coming. I noticed also he is also the faculty advisor for BI. Thank you very much. We also have the Inside from BI with Alexander and Eileen as well to cover this. Thank you very much for coming. It's a pleasure having you here as well. I guess for me to say is this is what you all have worked so hard for, students. And I must potentially also raise this as an issue because out of you team, there is not many girls, and on the Women's Day, congratulations very much. This is something we are working on. We were at MBIM yesterday, actually to talk about, for the CFA Society in Norway, about gender diversity. But thank you very much for your time. You stuck out, and congratulations to you. But this is something we're going to work on going forward to make it even harder and challenging and competitive, and also make it a more diversified team. I guess that's also the best for the investment process. So I wish you all the best of luck. It will only be one of you university teams present here at one time. You're not allowed to bribe, and this is non-public information, so you're not allowed to buy on it. And I guess like my last word to you is a famous quote from Benjamin Franklin, and investment in knowledge always pays the best interest, and that's why you're here. Thank you very much for coming. And we're going to start now 10 over 2 with Nord University.
Okay, we are the team from Norway University, and we will now present our sales recommendation for TOMRA. We will go through the business foundation, growth potential, financials, and investment risks. We have a 106 Norwegian kroners price target, which are at a 23.7% downside from the closing price. TOMRA was founded in 1972 by two Norwegian brothers. It started out with the design, manufacturing, and sales of reverse vending machines, which now is a part of the collection solutions. Until the year 2000, all the revenues came from this segment, but from 2000, TOMRA has completed several acquisitions, and they have grown big in sorting solutions, which in 2016 amounted for 40% of the revenues. Here we can see the segments. Material recovery and reverse vending are part of the collection solutions, and food sorting, recycling, and mining are part of the sorting solutions.
Yeah, and for the macro environment, we use the Pestel analysis divided into 6. We think it's a that they are highly dependent on the political factors due to the RVM systems, and they have low control of the political regulations. And the willingness to vend bottles and cans will be affected by the growing middle class we see, which are the ones who also vend most of the bottles and cans. A change in the human behavior might affect the average beverage consumption, as well as the importance of the sorting segment for both food and other material. 8% approximately of the yearly revenue goes into R&D, and which will benefit them in the case that that they keep up with the general development in the market. And the increased focus upon environmental friendly solutions also benefits Tromra. The state regulations and the international agreements will force countries and residents to for new requirements upon environmental changes. And there, the RVM systems, for instance, will help them meet these requirements. We think that the average threat of Tomra is low. As you can see, the competitive rivalry we have considered moderate. They are superior in the collection segment with 75% of market share in the RVM systems, but it's fiercer in the sorting section. The threat of entry we consider very low, as there are high entry barriers with complex technology. The threat of substitutes also we consider very low due to few alternatives in the market, and we can't see other solutions that can outsource these. For the bargaining power of customers, we consider a high switching cost for retailers with RVM systems. And we also consider that vertical integration is not relevant. The bargaining power of suppliers we consider no threats or very, very low because they supply most of the components themselves.
Our target price is based on the sum of parts valuation, in which we use the FCFF model and a dividend discount model. The earnings growth is a very central term in the free cash flow model, and the ROIC is the return on invested capital is again central in the earnings growth. And we, based on historical ROIC, we don't expect earnings to grow as much as the industry average, causing the free cash flows to be negatively affected. We also consider Tomra a high growth firm, which is shown in the blue model for expected dividend payouts. And we assume the recent expansion activities will cause the dividend growth in dividend payouts to continue for a few more years before it will fall to a nominal growth rate of the overall economy. And here are discount rates we used. We used CAPM for cost of equity to discount the dividends. And we had to derive a synthetic credit rating to measure the cost of debt. And we use both models in the weighted average cost of capital, which we use to discount the free cash flows in the future. And then we arrived at the target price of 106 Norwegian kroner per share, assigning most of the weight to the free cash flow model because Tomra have had changes in leverage. We also did a supplementary relative valuation, which supports our intrinsic value on all metrics.
The revenues. On this long historical chart, we can see that Tomra naturally are following the big macro trends. They are following the big macro trends. We also know from former research that there's a high the aluminium price has a high influence on Tomra. The chart on your right are showing high revenue growth especially the last 5-6 years, and the chart on the left are kind of explaining this. The chart on the left shows revenues from only the sorting part of the company, and because of the high number of acquisitions, the revenues from this part has grown very fast. If you take a look at the capital structure, we can see a positive development also here. Total equity in this period has increased a lot, from 46% to 62%. We also did a Alkman set analysis. This indicates how likely a company is to get bankrupted. TOMRA reached a score on 4.62, and about 2.9 are considered as very good. This is important to us because it means that TOMRA's risk of getting bankrupted we can consider it as zero or close to zero. These revenue numbers are solid, and the margins are good as well. This chart shows consistently growing margins. They are fluctuating from year to year, but over time there's a consistent growth. FactSet are operating with an industry average on 6-7%, which is TOMRA is a lot higher than that. We don't trust this FactSet number 100% because it's different to compare TOMRA to the industry because of the complex organization we are operating in. Yeah, I think we...
When assessing the risk assessment of the company, we have developed this matrix in attempt to better understand and interpret the impact shown on the vertical axis and the probability shown on the horizontal axis. For this, we have identified 5 risk factors we believe have a substantial impact on a company's operations. The company has an indirect exposure to fluctuations in commodity price, where, for instance, a low aluminium price would result in reduced attractiveness for customers to recycle. TOMRA's exposure to changes in the value of Norwegian kroner relative to other countries accounts for about 92% of the total income in foreign currencies. Therefore, a strong Norwegian kroner would result in reduced earnings when measured in this currency. Further, the company's operations are also strongly influenced by political decisions, especially regarding deposit legislation. If a country were to remove its existing deposit systems, there would be limited incentives to remain invested in the current region. An operational expansion of the company is also solely reliant on governmental involvement for it to be attractive to operate. To account for uncertainty, we used a Monte Carlo simulation and with 3 different factors, namely risk-free rate, EBIT growth, and terminal growth. The simulation accounted for variations in each of these factors, and after taking them into consideration, we can say that we are 71.3% confident that the intrinsic value of the company is between 55 and 125. Thank you.
Just take some time to just breathe, and then we'll continue with the questions. Okay.
Går det bra?
Ja, det går.
Vi fikk jo komme over. Nesten gjennom.
Kim, should we just push on, or do you want to?
Yeah, we'll just to get ready, and you are ready to crack on. We're going to start the time, 10 minutes, and you're going to say when it's 1 minute left. Yeah.
All right. Thank you very much for a good presentation. Let me kick off with the first question, which is a fairly broad question, and obviously you're recommending to sell, and you've gone through the analysis. So my first question is, where do you think you could be wrong?
We think Sorry. There's just so many contingencies in, especially the collection segment, which can affect future values. So we haven't, of course, taken all of them into account, and I think everyone could go wrong there. Actually, yeah.
Okay. Yeah. You had a question?
I do indeed. So, if I look at your slide here on revenue growth, am I supposed to hold this or? Well, anyway, if we look at your slide on the revenue growth, I think it was a few slides back. Of course, Tomra, you know, it's had a fantastic historical growth. But if I'm to read your chart right here, it seems that you're expecting the growth to slow off. And my question then is, you know, given the fact that we are now seeing, you know, it's no secret that it's a green megatrend out there. People want to see less waste. They want to see more recycling. You know, everybody knows about the plastic issues in the oceans. So why, you know, I guess my question to you guys is, as an investor, why should I assume that the revenue growth is going to start tapering off in Tomra, as you have pointed to here? When we do know that there is potentially a tender coming in Scotland, there's talk about bottle recycling in the UK, which would probably lift earnings by, what, 10 to 15%, if I'm not too mistaken. So if you can elaborate a bit more on that, that would be good.
Yeah. Of course, that's a big issue, and we expect all the last acquisitions which has happened last 5, 6, 7 years from the chart from the left, and we can see that the revenues have been very high. So over time, of course, it will be natural that it slows off, and what you are explaining, of course, different new markets, we have looked into that, but for this, will be natural to take it. Don't know if you can push me in here, Ivan, but
Yeah, some of this growth is due to former expansion, and yeah, we expect the future expectations is based on both history and just maturing of the sorting segment, so that the collection segment will continue its growth for a few more years, and then the sorting segment will slow off from today's rate.
okay, thanks.
Great. Thank you for the presentation. On this same slide, you can clearly see that the sorting business is a long string of acquisitions. Have you looked into some of these acquisitions and judged how profitable they have been? So the best acquisition, for example, what has happened to the profitability of that business in the years after it got acquired?
Yeah, we know that not deep into everyone, but the acquisition with T-Tech in 2004 gained a lot of profitability. Not necessarily on that time, but in the more years. I don't think I have any better answer than that, but some are good and some are bad, of course.
We have also considered some effects from this based on historic data, and used it in both the earnings growths and the capex to measure in the future.
In your risk assessment, there seems to be quite few risks regarding Tomra and its industry. And then you also point to a growing industry due to more green perspective and recycling. This goes back to the revenues. How can you expect revenues to slow down when there's so few risks and such a good market momentum? It seems that Tomra is in a very good position if you look at these two endpoints. All right. Well, in your risk assessment, what led you to your conclusions there? Question 1.
For the various risk factors?
Yes.
Based on
So this is our different risk factors, and we estimated this based on just the macro environment and the information we had available. We know that TOMRA has high exposure to, for instance, commodity prices, and a lot of their revenues is for currencies, exchange currencies. And they're also strongly influenced by political.
Yeah, but I was thinking more about the industry and competitive positioning chart you had.
Where's that?
Further back in your presentation.
Do you mean the Pastel or the...
Yeah, you had there, the industry and competitive positioning.
Okay, yeah.
Yeah, there. Next one.
Yeah, okay.
This one. There seems to be on your charting scale here, there's very few of the risks that are assumed to be very high. Most of them are around 0 or 2, which seems to be low risk. And this is why I'm assuming or asking, how can you be so conservative on your estimates when there doesn't seem to be much industry risk?
Well, as we have on our last slide, which we didn't now get to see, unfortunately, we assume that they have great financials, and they have also a strong position in the market, and also have also a good future, probably. So, but we think that that our target price is more correct than the closing price at 139, which was earlier in February. So, yeah, and we think there's an overreaction in the markets. Yeah.
All right. So if I get you correct, then your sell recommendation here is more based on a valuation call rather than a industry or company specific call. So this is a market overreaction. That leads me over to my next question. Why do you think the share price is trading at 139 and not at 106 if that should be the fair value? What is the market seeing that maybe you aren't, or what is that you see that the market doesn't see?
Then we come back to the different scenarios that can happen. Maybe we have been a bit conservative in some of them compared to other people, but we believe based on our forecast, it will. Should be the target price.
All right, thank you.
Yeah, in a recent announcement from New South Wales, where they did the bottle recycling machines, they are now leasing the machines as compared to in the past where stores have bought the machines of TOMRA. So the question is, with that in the back of your mind, what do you think of the capital structure in TOMRA? And, with increased amounts of leasing, what does that do to your dividend forecast? And also, how does it impact your thoughts in around margins?
Could you repeat the last part of the question?
So it seems that the new bottle recycling schemes, right, is that the machines are leased. They're not sold directly to the companies. So my question then is, how does that impact TOMRA's capital structure? What does it do to your dividend forecasts? And also, what's the impact that you think it could have on the margins?
In our models, we have considered, based on historic growth in dividends, that this rate will. Thank you very much.
Bra jobbat. Super.
Hello, thank you so much for watching our presentation. We are the Norwegian School of Economics, and with me today I have Daniel from the US, I have Diego from Italy, and Norbul from Kazakhstan. My name is Håkon, I'm from Norway. And we are here to present you our analysis and investment recommendation for TOMRA systems. All right, so we issue a hold recommendation with a target price of 114 Norwegian kroner, offering a downside of 15.3% to the closing price of 134.6. The reason lies on four main arguments. The first one being that TOMRA is operating in an attractive segment with long-term fundamentals suggesting growth well into the distant future. Secondly, operationally and strategically, TOMRA is well positioned to leverage themselves both in new and existing markets. Our primary concern is a question of valuation because the current stock price relies on a best case scenario regarding market dynamics outside of TOMRA's control and also assumes perfect execution into new markets. We also see uncertainty regarding the political factors and the exchange rate volatility as TOMRA going forward. We have utilized three different valuation methods, the first one being the DCF, multiples, and Monte Carlo. Our target price is based on the DCF model because it relies on the fundamental values of the company. So we have rather utilized the two latter as a form of comparison. So TOMRA is leading by the vision of leading the resource revolution. This is done by two main strong business areas, namely the collecting and sorting solution. In the collecting, they have the reverse vending and material recovery, which has been alongside TOMRA since its genesis, and it has now several installments all around the world. In the sorting solution, they are trying to optimize their resource productivity through food, recycling, and mining, and now consists of approximately 50% of the global market share. Going forward, TOMRA is also trying to position themselves towards the mega trends, such as emphasizing on circular cities and smart cities. Looking at TOMRA at a glance, over the past 5 years, the share price of TOMRA has increased by 179%, giving us an annual CAGR of 22%. This has resulted in a market capitalization of 20.6 billion Norwegian kroners, meaning now that TOMRA is the 20th biggest city at the Oslo Stock Exchange. We also believe that TOMRA is led by a strong and robust management with a diverse background and long experience. Furthermore, they are emphasizing on several corporate policies, such as the Norwegian Code of Conduct, ethical behavior, and also aligning their new CSR program with the UNESCO's sustainability program, which we believe will give credibility and stability for TOMRA going forward. So, to my colleague, Diego.
Competitive positioning shows that TOMRA stands among its peers for two simple reasons. TOMRA reaches more market than its competitors and has a strong market share in each of them. Moreover, TOMRA benefits from the substantial initial investment and technological knowledge required to enter the collection and the sorting market, making those two segments unattractive to newcomers. TOMRA also show better financial performance in terms of cash flow generation and leverage, a positive scenario that gives the company resources to grow through acquisition as they historically have. Many market factors can influence the demand for TOMRA products. Legislative framework and government laws on recycling and waste management lead the growth of the reverse vending machines. Moreover, the urbanization may increase the utilizing rate of those machines, but high recycling rate among people who use separate collection can decrease the future need of the machines. For this reason, we believe that the main growth of this sector is the government laws, and without the new market openings, the only source of revenue are the replacement of old machines and the connected services. Food mining and recycling sorting can be done using automated machines or can rely on manual labor. Hence, market with cheap labor cost may be reluctant to choose automatic sorting solution. For these reasons, the sorting solutions the growth is driven by the technology development and labor cost. Moreover, new market segment can be found using new application or new technologies. Now, the word of Dan.
Great, thank you, Diego. So to take us through valuation and financial analysis, we're projecting a 3.2% revenue CAGR over the next 10 years. Also, we're projecting a continuation of current profit margin, so that translates also into a 3.1% net income CAGR over the same period. But our focus for TOMRA, and really what we believe is important for the company, is revenue growth into the future. So we've made several assumptions regarding revenue growth. First, looking at sorting revenue, we're projecting a 2.5% revenue growth over our explicit forecast period. And this is slightly down from a 5 and 9% growth rate over the previous 2 years. But we've taken a conservative approach due to volatility in the business. And also as market share increases, we could expect growth rates to potentially come down from previous levels. Collection revenue, we forecasted the existing business at 2.5% growth, with additional growth being layered on top of that from expansion to new markets, namely 3 in Australia and 1 Scotland in the UK. So we believe our forecast is really a good case scenario for TOMRA. We've made several assumptions surrounding this. So the first is that new markets that we expect to open will do so, and TOMRA will be able to expand to those successfully. Continued growth in the existing business, and we've made no assumptions surrounding fluctuations in foreign exchange, which could affect the business going forward. And also, finally, we've projected stable expense ratios within the business in our model. So this is a look at our discounted cash flow model. So you can see we've forecasted free cash flow on an explicit basis over the next 10 years, with terminal value in year 10 representing 61% of the total enterprise value of TOMRA. These have been discounted at a rate of 7.4%, and we've made an adjustment for net debt to arrive at a market value of 16.9 billion, which translates into our target stock price of 114 kroner. Next, Nurbal will take us through the rest of the presentation.
Well, in the Monte Carlo simulations, we simulated the stock price by altering the values for WACC, perpetuity growth, and the fluctuation in exchange rate. The mean value for 10,000 iterations was 116 kroners, and the first and third quantile values were within 10% margin from that value. It's worth mentioning that 70% of the simulations landed within the price range for hold recommendation, while only 2% of the iterations landed above the buy threshold. Now, to conclude the valuation section, here you see the range of prices for different approaches we used. The DCF range of prices was obtained through changing the perpetuity growth by 1%. Monte Carlo is first and third quantiles, while the comparable analysis is mean and max multiples. Comparable analysis has a wider range because of the TOMRA's market multiples are way higher than the peer group. Overall, these methods support our initial valuation made by DCF. Now moving towards the risks, we identified 4 main pressing issues for TOMRA going ahead, most important of them being political risk and currency fluctuations, because they have highest likelihood of occurrence and the highest severity in case of occurrence. Let me now elaborate more on the political risk. Highlighted regions here are the markets that are exploring the opportunities of depository system laws in the near future. While we have observed some legislative risks in the existing collection markets, as Iowa has introduced a repeal to the Senate regarding the bottle bill in the state, while Delaware has abolished its bottle bill in 2014. Overall, this means there's a limited number of new potential markets for TOMRA's collection segment, while the existing markets are vulnerable to risks, and there's a high uncertainty if any of them will follow the Delaware example as in 2014. Okay. Overall, based on our analysis, we issue a hold recommendation at the target price of 114 kroners. We base this on the fact that although TOMRA operates on a very attractive market and with a high growth opportunities in the long run, we believe that market dynamics outside of TOMRA's control and issues like political uncertainty around those new markets will affect the future earnings of TOMRA. Therefore, we issue a hold recommendation with a target price of 114 kroners. Thank you for your attention. Now we open the floor for Q&A. Thank you.
All right. Well, thank you very much for a very good presentation. Let me kick off with a question. You mentioned that Tomra is growing on back of some of these structural green changes, the whole recycling trend. Then you forecast 2.5% growth and say that that's actually a good case. Obviously, it's your base case. The historic growth has been much higher. You also say the green growth agenda is there. So why do you say that 2.5% growth, or lower than historic, is actually a good scenario? Could you elaborate on that?
Yeah, thank you for your question. So we've forecasted revenue for both sides of the business, so for collection and sorting. With sorting, which relates to your question, we've gone with 2.5% growth, mainly as a sort of like taking it down, as you said, like a more conservative approach to the past. Part of this is the fact that we've seen so much volatility in this segment, so you can see these percentages have fluctuated quite a bit. And so we realized that issues like foreign exchange volatility could, in the past it has helped the business, but we could potentially have a negative impact from foreign exchange. And so it's really that risk and that unknown is why we took a more conservative approach to this business segment.
And on collection, the 2.5% in collection?
Oh, yeah, so with collection, so we are actually forecasting 6% in the next year, and then 9% in the 2 following years, and then having that drop down to then 2.5% going forward. This is mainly due to the business relying on replacements and service revenue of the existing installations, with all new revenue growth opportunities, we believe, coming from new markets. And so those we've identified as the most likely right here in Australia and Scotland. And so really the impact of those is what's driving our valuation.
Just one follow-up on that. The 2.5% growth after the sort of the initial phase is arguably lower than even nominal GDP growth, although there should be some sort of green agenda. Is there any particular reason why you've gone sort of as low as 2.5?
So the reason we went with 2.5 is because like most countries have indicated like a 2% inflation target. So we believe we were slightly above that. And so, yeah, that's why we went with 2.5.
Okay, thank you.
Yeah, in the start of your presentation, you mentioned the strong strategic position of Tomra. You also mentioned that you see exciting opportunities for both main business lines. You also mentioned a strong management team sitting at the top of the company. We also have, on the back of our minds, as mentioned by my colleague here, the green wave that's coming over the consumer and over the different politicians. So I guess I want to, as my colleague here, point a little bit more to growth forecasts. Like having all this in the back of your mind, why do you land at the sorting revenue growth of 2.5%? And yeah, also the collection revenue. I'm quite interested to pick a little bit more on the drop off here from 9% back to 2.5%. Because in the back of my mind, I would say that you're basically then saying that after you've had those new countries open up, there is basically nothing that's going to happen for Tomra going after that. And how likely do you think that scenario is?
Thank you for your question. As we mentioned, we did see great growth opportunities for Tomra going forward, both strategically and operationally. The main concern is the political factors. As we've seen last year, for instance, China abandoned waste import, which affected the US hugely. And also the legislative framework going into the different countries. We cannot, it's so much uncertainty, so we didn't want to forecast a good scenario. We wanted to be a bit conservative, so we have that on record. Yeah.
Great, and over to your valuation. I think you say that you forecast a free cash flow growth, so 7.4%, with a revenue growth of like 3.2% on average, with flat margins. Can you explain us how you get to that?
Yeah. So, yeah. So that increase in or the free cash flow is driven as we go from net or EBIT over like calculating free cash flow, some of that is coming from the taking out depreciation and also the effect of working capital on the business. So there are some ratios that we've adjusted there, kind of taking forward current ratios. So some of that increase is coming from those calculations.
Yeah. And with all that new cash flow, have you made any assumptions about how they will deploy that cash flow that they generate?
We assume that the cash flows the expenditures of the free cash flow will stay at the same level as it was before. So they will keep their historical levels of spendings of that cash flow. So the dividend policy will stay the same. Everything else is at the same ratios by our assumption. And as you can see here, you mentioned this graph. So it might seem that the net income line is going straight and it's hard to follow. But in fact, it's a scaling issue, and net income is actually following the same slope as the revenues. So if there was unclarity here, so that's it.
Where do you think you could be wrong? What is the market seeing that you aren't? And opposite, what is that you see that the market isn't seeing?
Well,
given that the share is trading far above your target price.
Yeah, currently, but we believe that market might suggest that the new markets will keep opening up for TOMRA further than we predicted. So currently we know that the Scotland and Australian states are opening up for the deposit loss systems, and TOMRA will be executing their operations there. But our assumption would be that the markets expect this new potential collection markets to open up constantly from year to year, and that's the difference from our approach. We believe that there's no certainty in that, so the political risks are too high to assume that the new markets will keep opening up from year to year.
That's good, and that's fair to implement a 2.5% revenue growth for the collection side, but 50% of the business comes from sorting solution, which isn't politically dependent, at least not as much. Have you broken down the markets there? Are there any regions that are more mature than others, or where do you eventually see the growth in sorting solutions? Then why is that only going to be 2.5% if there's not the same political limits or barriers that you have in collection?
So one of the main risks we see in the sorting segment is the impact of fluctuating commodity prices on TOMRA's customer. So as they make these large purchases of sorting equipment, low commodity prices, which we're currently experiencing and could be coming out of, but the future is unknown, that could be like a headwind for TOMRA's business. So it's things such as that although there is a market for it, it could be, we see headwinds coming from that direction in the future, and which we might disagree with the market on that point specifically.
Have you made any assessment regarding the length of the product cycle for sorting solutions?
We tried, but actually the renewal rate is not like a total driven in the sorting. It's not a total driver in the sorting solution, so we haven't accounted for that fact.
In the past, TOMRA has made quite a lot of acquisitions, and it doesn't look like that you've added acquisitions into your forecast. So just very plainly, perhaps, do you think it's good that TOMRA makes acquisitions? Should they do more or should they do less? Have you looked into that?
We have looked into that more as a management concern, because we see that the management is strong because they do a lot of acquisition and they actually increase the dividends. So we have looked at the acquisition as a factor for strong management, but we haven't accounted for this fact in the evaluation. All
right, so this is basically, it seems to me that you're now it's going to run out of time, but your conclusion is that it's a quality company, but the market is overvaluating the company. So this is basically a valuation call. Should we short the stock? It's more, you have a hold recommendation with a 15% downside. Technically, that would be a sell recommendation. We operate with 10% as a sell. But still, and you can answer yes or no to this. Would you short the stock based on your conclusion, or would you just hold it? It stays for itself. I'm sorry, but.
Is everyone ready? Yep. Okay. Please check. Yeah. Think about it for a second. Are we experiencing a modern history of David and Goliath? Are investors having too much faith in the giant? We believe that is the case for Tomra. And in the next 10 minutes, we're going to show you why. I'm here today with Philip, Nikolai, and Christopher. My name is Jens, and we are representative of Copenhagen Business School.
And today we're here to present to you our sell recommendation of the Tomra stock with a target price of 117.4 and a downside of 9.7%. First, we'll guide you through the financials and afterwards our valuation. But let's first have a brief description of the company. Tomra focuses on two main business segments, collection and sorting. The collection focuses on reverse vending and material recovery, whereas the sorting segment focuses on food, mining, and waste industries. In our presentation, we focus on these, as these are the primary revenue-generating units. Worth mentioning is that Tomra recently expanded their food sorting segment through the acquisition of Compac. Tomra is a leading provider of solutions within these business areas. This position is maintained through several competitive advantages, ensuring superior performance. Firstly, these cover the attainment of synergies across divisions. The TCS and TSS both employ sensor-based technologies. And the organization is therefore capable of utilizing similar components, knowledge, and technologies, enabling economies of scale. Economies of scale is further enabled through their worldwide operations and market-leading position. Tomra has a reputation for high-quality products, facilitated by their immense experience within the field and high investments in R&D. Let's now turn to an overview of the industry. Growth rates in the reverse vending is low as markets have matured, and replacement cycles in Sweden and Germany nearing their ends. Furthermore, conditions in the sorting segment are expected to challenge actors in these industries, requiring for the companies to adapt to changing demands and trends. Failure to do so will cause profitability to suffer. The changing conditions in the markets change the need for economies of scale, differentiated products, and technological superiority as key success factors. Jens will now guide you through the competitive landscape of Tomra.
Thank you, Philips. As we start off with the reverse vending machine market, we see that Tomra accounts for 75% of the market. They have the highest EBITDA margin, they have the highest geographical presence, and they have the highest spending in R&D. Considering the market as a whole, we expect the market to increase in size as new markets open up in Scotland, Australia, and also potentially in England. We expect Tomra to get a fair share of these markets, and therefore we don't see any changes in the competitive position going forward in this segment towards 2021. Going to a food sorting segment, we see that Tomra has a medium to low EBITDA margin compared to their peers, and also they have a relatively low investment in R&D compared to their peers when allocated after revenue. Considering the market of food sorting, we expect it to raise as we see a demand, an increasing demand for food safety and quality. Considering the last segment, waste sorting, we see that TOMRA maintains a medium EBITDA margin compared to their peers, and also they have a pretty high geographical presence. Considering the market as a whole, we expect it to increase in size as well because of several megatrends such as increasing urbanization and increasing environmental focus, and also labor wages. Increasing labor wages may talk in favor of replacing manpower with machinery, lowering the production cost. I'll now grant the microphone to Nicola, who will talk about the valuation.
All right, so our valuation is based on an 80-20 distribution between DCF modeling and EV/EBITDA multiples. Using our DCF model with a heavy weight, we've attained a price of 117.4 Norwegian crowns. To complete our DCF model, we've had to calculate TOMRA's weighted average cost of capital. Two highlights here is the risk-free rate, which is a revenue-weighted average, and our return on equity, which is quite similar to our WACC. This is because it's weighted very heavily in our calculations. I'll now give the microphone to Christopher so we can guide you to the rest of the valuation.
Thank you, Nicola. Using the WACC derived from before, we arrive at a DCF valuation of 115.6 per share, a downside of 11%. The DCF valuation is mainly driven by two major value drivers, namely the revenue growth and EBITDA margin, both of which have been affected by the Compac acquisition. Worth noticing is that we have set the terminal period in our valuation to 2021, and the growth in the terminal period is set to 2%. Looking at the revenue growth, we see that the growth is expected to be the highest in 2017. This is due to the Compac acquisition. However, it's pulled somewhat down by lower sales of REMs in the German and the Swedish markets. If we look at the different segments of the different divisions, we see that the segments in the sorting division is providing much higher revenue growth than the collections equivalents. This will make the sorting division the highest contributor of revenue by 2020. Looking at the EBITDA margins, we see that the overall EBITDA margin of TOMRA, as well as the EBITDA margin of the sorting division, is expected to take a cut in 2017. This is due to the Compac acquisition, where Compac only contributes with around 5% of an EBITDA margin. However, we expect the EBITDA margin of the collection division to be fairly constant over the period. The normalized level of the EBITDA for TOMRA is also expected to get a bit down, as the sorting division has a lower normalized level of EBITDA than the collection division. Furthermore, we have supplemented our DCF valuation with multiple valuation of the EV/EBITDA multiple, where we have set comparables on fundamentals such as revenue growth, EBITDA margin, and enterprise value. Combining those two together, we arrive at our target price of 117.4. Furthermore, you should notice that an opening of the English market will increase our target price of around 13 to 20 Norwegian crowns per share.
All right, so to assess how changes in TOMRA's fundamentals would impact our analysis and valuation, we performed a sensitivity analysis. If you look at the bottom table, you can see that an increase in both EBITDA margin and revenue growth would result in a target price of about 138.3 Norwegian crowns. At this price, we would only issue a hold recommendation, so even at significant changes, our valuation wouldn't be that much different. So our assessment is that our valuation is quite robust. We've analyzed 11 different risks for TOMRA, but let's just go through a few highlights. First is Compac. We see the turnaround of Compac as highly critical, since it's quite a big part of their sorting solutions now, and a failure to turn it around would result in significant losses, both in profits and in their EBITDA margins. Secondly, the R&D. If TOMRA fails in this part, they would lose a lot of market shares, since they compete in very technologically reliant markets. However, we do assess the risk of this being quite low, since TOMRA has about an investment of about 8% of their yearly revenue into R&D, as well as an immense experience in the field. Lastly, TOMRA is quite exposed to currency fluctuations, since they don't use currency hedging. TOMRA themselves estimate that a 10% change in the Norwegian crown would result in about 8 to 12% change in their profits. So, in summation, TOMRA is actually quite a good business case. However, there are several chinks in this giant's armor, as we spoke about with Goliath, and as such, we issue a sell recommendation at a 12-month horizon. Thank you very much.
Do you want some water before you have your questions? Or?
That could be a good idea.
Yeah. All right. Well, thank you very much, guys. Is the mic on? Yeah. All right. Well, thanks for the presentation. Let me kick off the questions on valuation. You used two methods, DCF and a multiple-based approach. You weighted it 80-20. Could you perhaps tell us why you chose these two methods and why you weighted them as you did?
Should I take that?
Yes.
Yeah. We chose the DCF as it is a main, as it has a normal method to use in the valuation of companies, where we have looked at the projected cash flows. We have used the dividend-based model, where we assume that every leftover cash that is not paid out as dividends is invested in the company at an NPV level of 0. We have supplemented by the multiples, as we deem it somewhat unsecure to only base a valuation upon the DCF valuation, and the distribution between those two is chosen as it is hard to find peers and comparables for TOMRA. So therefore a high weight of that method would be somewhat stupid and maybe give a wrong result. Therefore, the high approach, a high level of DCF valuation.
And maybe just one follow-up. What is the main advantage of using DCF?
It's the cash flow predictions. It's the cash flow looking forward. And then we supported by the multiples by getting the market prices in. And that's what I thought about that. Thank you.
Yeah, thanks, guys. Just correct me if I got this wrong, but did I understand that you have in your terminal value in your DCF, you had a 2% growth rate on revenue? What does your target look like if you take that up to 3.5%?
Given that sensitive analysis.
Yeah, but we made it. I can't remember the exact number, but I think it would be around 35 and 140. We haven't included in the slide pack. We should have done it, of course, but I think it's between 135 and 140.
Okay, and you also mentioned that if England were to open, you see another 20 krona.
Yeah, 13 to 20.
At what probability would you put England opening up at the moment?
In England?
Currently, 10-20%. It is based upon England being much similar to the Scotland, which is projected to open. It is decided in the Scottish Parliament that they will open up soon. And then we think that England will follow up, as they can draw on the experience from the Scottish market, and the Scottish people and the English people is somewhat similar.
Yeah, so if I may add, the English market depends very much on the success of the Scottish market. So if the Scottish market becomes a success, we might see an English market open as well. Therefore, we have a low probability of it open right now, as we can't say any more about it before we see the Scottish market.
I think you mentioned that in your DCF valuation, you reinvested capital at 0% return on capital. What has TOMRA done historically? I mean, they have done a lot of acquisitions and also spent quite a bit of money on CapEx. Do you have any sense of how effective that spending has been? What kind of returns they have generated?
It's been somewhat different. Some of the acquisitions they have made are going successfully. Others that they have made are sold off again, as they didn't make the projected dividend that Tomra expected. In that case, could be mentioned Orwag and Persona, which were bought in, I think it was 2006 and sold off in 2010, 2012. So it's different. It's dependent on the case, but deeming at the Compact acquisition, it looks like that it will contribute to the overall performance of Tomra. However, we look at the 12-month side, and in that case, we see a sort of recommendation.
Yeah, and then on the margin expansion in the food business, what levers can Tomra pull in order to increase the margin back up to 18%? What needs to be done?
I'm not sure I understand the question. Can you clarify a little?
So how can Tomra take out costs or increase revenues, get the operational leverage in order to get the margin up to the historical level that you assume in evaluation?
Well, in our view at least, Tomra is quite experienced in the field already, and as such, implementing their already established business practices into Compact specifically, because Compact has actually dragged down their EBITDA margin. Implementing their business practices there would at least help quite a bit in that regard. Furthermore, it might not be possible for them to drag the EBITDA margin all the way up to the same place as RVM as such, but it might be possible in the future, but at our 12-month horizon, we don't really see it as a possibility that they could develop their EBITDA margin that much.
However, we have seen, we may expect horizontal acquisition within the industry of Tomra.
In your multiples approach, what kind of peers have you been comparing Tomra with?
So our approach was to Tomra is a hard business because it's very diversified. So we decided to look at fundamental with the same growth, with the same business risk, and therefore we chose our multiples by that. It's hard to find a similar business who has operations in every aspect as Tomra. So therefore we chose to look at the fundamentals and compare it by that.
All right. Where do you think you could be wrong?
It's all estimation, so particularly we could be all wrong. So you're asking about our weaknesses somehow.
Well, I mean, given that the share is trading above your target price, what is it that somebody else see that you aren't seeing, or?
Maybe we could use a WACC that's too high. We could have estimated something wrong. It could be the risk-free rate. It could be the market premium. It could be anything.
Yeah. Furthermore, we're quite conservative in some of our estimates, but that might just be because we're a little risk averse.
Also, people can be optimistic about the Tomra share because it is a good investment case, and our recommendation relies on a one-year target. And therefore, if people tend to hold it, especially when you think about 26% is held by Latour, which is an investment association, so they may have a longer horizon than we did.
Just to follow up on my colleague here, I think what's actually, well, you probably know this. What's the current price earnings ratio for Tomra for 19?
On reported figures, 27, 26.
What do you think? What do you think the market sees? Why are those estimates? Why is the share price where it is today? What's missing here in terms of what you see? Like, is there any, except from leaving aside your WACC assumptions, but just on the pure earnings side, what's expected from the market that you probably don't expect?
It could be that we have set the terminal period to be 2021. If the market looks at a longer period, they could catch some growth opportunities in the future that we haven't included in our estimates, which shows the 2021 level as it is deemed by us to be a secure margin. If we go any further into the future, it could be hard to tell what's really going to happen. Furthermore, there could come new competitors in from the right that could totally turn upside down on the market and just catch it all because they have a better solution than Tomra.
Just to add on that, it may also be that synergies are attainable more than we have expected or in our estimates have accounted for. So, like, if investors believe that synergies can provide Tomra with higher competitive advantage, that may increase their expectations.
And on top of that, the entire business case is well supported by these mega trends, and therefore the market might be willing to pay a premium to get into the stock.
If you were in Tomra's shoes, what would you do the next 12 months as a company?
Make sure that the Compaq acquisition is going well, and furthermore, you see that they just recently had bought a new company in New Zealand.
Good.
Thank you. Thank you for your attention.
All right. Good. Are we ready?
Yes.
Good. All right. Good afternoon. We are the team from BI Norwegian Business School, and the next 10 minutes will present to you our key research findings and recommendation for Tomra, a company that internationally engages in the industry of machinery and is present on the Oslo Stock Exchange. So, based on our analysis, we get a target share price for 1 year of 114.8 Norwegian crowns, and that represents a 12% downside from the last observed market closing price in February. Therefore, we issue a sell recommendation. So, although Tomra has in the previous years performed well and has added value to its investors, we state that this will not be the case in the forward-going years. So we have calculated that the current market share price is overvalued, and we further support our recommendation of selling with the next facts. So first, there is an overestimated likelihood of Tomra to expand in the new markets. Then they are expanding in a very volatile cyclical industry, and also their current growth is unsustainable. So now let's talk something more about the business Tomra operates in. So Tomra engages in the provision of the sensor-based solutions in two segments, in collection and in sorting. And as we can see from the graph, they have been over the past years increasing their revenues in the sorting. So this is expected to continue and also eventually balance out the collection. Well, this is a little bit problematic. Why? Because, especially recycling and mining, they depend greatly on the commodity prices. And those are, very, very much exposed to cyclicality. And now Ruud will tell you something more about the competitors.
Thank you, Mina. To further reiterate our investment thesis, we looked at Tomra's current competitive scenario. As you can see, Tomra maintains a consolidated market share in the RVM and material recovery segments, which constitute its collection business. However, the markets are more fragmented when it comes to its sorting business due to increased global competition. To reiterate our point in the investment thesis where we said the growth of the markets will not be sustainable, this stems primarily from the collection market. Tomra has recently completed orders in Germany and Sweden for replacements, as well as entered into New South Wales for about 4,500 machines. We believe that the growth that this has represented will not continue into the future, and thus we estimate lower growth rates in the collection markets. Furthermore, we believe a key demand driver for Tomra in the sorting market would be increased regulations, especially from developing countries like China, where they have made their recycling regulations more strict. It is now necessary to export waste into China that needs to be sorted. So this is a potential demand driver. However, there are a lot of businesses that currently operate in this segment, and it will be challenging for Tomra to compete. Now I introduce Toby to talk to you about the markets.
Yeah, thank you very much, Rit. On the map behind us, we can see in light blue the markets where they operate in sorting. And on first glance, it really looks like they are well diversified over the globe. But if you actually dig a bit deeper into the revenue shares coming from those different markets, you can see that North America and Europe are actually the biggest contributors in terms of revenue share. Also, the market is somewhat more fragmented than the collection market, and therefore they have less leeway in pricing their products in that regard. In dark blue, you can see the collection markets, and there are only 11 markets they're operating in. However, the markets are very consolidated. That means they have a high market share in those markets, which gives them more leeway into pricing. However, if one of those markets breaks away, that pushes the business significantly down, and it's not unprecedented. The market is reskinned over the last years. For example, the market in Victoria was reskinned in 2008. There are also some potential new markets that might pop up in the future, namely Scotland, some regions in Spain, and Quebec is thinking about expanding those, their deposit scheme. However, it's very, very difficult to actually implement one of those deposit schemes, and that is due to the fact that the industry is not a big fan of those deposit schemes. That is because the deposit schemes add to their cost, and the consumers perceive a deposit as a tax. Therefore, they are less likely to buy products. Therefore, in Germany, it took them 11 years to actually implement the law, which is a significantly long time, especially for a country like Germany, because we Germans are actually considered to be very efficient. So yeah, how does that translate into revenues? Over the last 4 years, we've seen a CAGR of 15%, and we don't expect that to move forward over the next 7 years. And that is mainly due to the fact, again, that the new markets are actually hard to implement. There's underestimated market risk. Furthermore, the cyclicality has a higher impact on the Tomra business. As we can see, it is growing significantly over the years, coming from 37% to 42%. So that will put some pressure on the business due to the cyclicality. And now Craig is talking more about the valuation.
Thank you, Toby. To derive our fair price, we have relied purely on the DCF analysis. We have made a projection of free cash flows until the age of 2024. We have calculated a weighted average cost of capital at 7.19% with a cyclically adjusted beta. And we have determined a terminal growth rate of 3%, which is a bit above expected inflation rate and GDP growth rate, and that's mainly because Tomra is highly exporting company. The implied share price that we have arrived at is 114.8. And to further stress test our key assumptions, we have performed a Monte Carlo simulation with 100,000 iterations. The 64% of them have fallen at least 10% below the current market price, which represents a sell.
We have also performed a sensitivity analysis, and we have identified that Tomra's share price is mostly sensitive to the change in the future revenues, the level of interest-bearing debt, and also the terminal growth value. So we have adjusted the models accordingly. In the center, we can see our with DCF obtained target share price, and the red line here, it portrays where the current market share price is surpassed. We argue that this area will not be likely achieved. Why? Mostly because there is an uncertainty in the opening of the new markets, and also because the beta of the company is increasing.
Now, even though we have determined the fair price based solely on the DCF analysis, we have also performed relative valuation with forward EV/EBITDA metric. And we have seen that it has been trading recently highest among its peers. The historic premium has been 22%. However, the premium right now is over 50%. The implied share price that we have arrived at is 95.4. We have also looked at the forward PE ratio, which historically hasn't been trading without any premium. However, the premium now is almost 40%, and the implied share price is even lower at 88.4. Now Fabian will talk about investment risks.
Thank you. The main investment risks when it comes to collection solutions is the political environment, which is currently really uncertain. Imagine, in a really uncertain political environment, the first priority on a political agenda might not be implementing a new deposit scheme. So that's the main driver here in this section. When it comes to sorting solutions, we experience a competitive landscape that is even increasing to grow in 2018. So the more competition that affects the market share of TOMRA, the less likelihood that they can maintain their market share and have stable revenues. To wrap up everything, we think that TOMRA is actually a good company, but the expectation for new markets to opening up is not that high actually, because we have seen it is a long and complex process to implement new deposit markets, and there is a high instability in political environment. The other part is the expansion in more volatile cyclical markets through the sorting business. So this is just more competition, and TOMRA really needs to make sure they can have their market position maintained. To sum up, I would suggest to sell TOMRA shares, even if we think it's a good company, it is a bad investment. Thank you very much for your attention, and we would be open right now for your questions.
Okay, guys, take a minute with water and
Do you maybe want to check on the microphone? It's it's not turned on.
I think this one.
Yeah, I think this was somewhat weird. They're streaming. They're streaming actually. So it seems like the other one is a bit louder.
Check.
Are you guys ready?
All right, let's kick off. Mick, do you want to start?
You're very clear on your revenue estimates, but you don't really mention anything about your EBITDA margins or anything else from the profit and loss statement. What do you see happening to the margins?
Yes, can you flip the slide, please? Yeah, you can see that the margins are actually quite strong. They're stronger for the collection business because there we have a sales market. Their revenue share is also very dependent on service, which is a more margin, which has higher margins in general, and therefore they have very strong margins in that regard. For the sorting business, it's somewhat lower the margins because they have more competition in those markets, which puts a bit of more pressure under those margins. But in general, you can say that the margin development is quite good.
And quite stable.
Quite stable, yes.
When you do your relative valuation or multiple comparisons with peers, what kind of companies have you been comparing TOMRA with?
So this is the peer group that we have constructed, and we believe the peers aren't truly comparable. That's why we have based the DCF, the price purely on the DCF. As we can see, we have only one public company, the public peer in the collection business. We have also seen Envipco, but Envipco's margins were all over the place, so we have excluded that from the valuation. And the sorting peers are somewhat spread out among different segments, and they are not actually competing with TOMRA in all the three segments in the sorting industry.
Last one for me then. You point to high risk due to commodity prices and cyclical industries. How much of TOMRA's revenue share comes from cyclical end markets?
Well, currently it is around 30%, but we do believe that this will continue to increase. That's why we have also adjusted a bit beta in that regard.
All right, thank you.
Yeah. Could you just flip to the very last page of your appendix? I just wanted to ask some questions to your DCF valuation.
DCF?
Yeah, I think it's a...
DCF.
Yeah, here. I'm just interested about the terminal year there. So can you explain what's happening to working capital first?
Yeah, the working capital is very... so the change in working capital in 2017 is very high. We have spotted that pattern due to the potential new markets openings. And this has happened in the past. The stack up of inventories has happened, and we have modeled the ratio of inventories to cost of goods sold accordingly to the historical evidence.
And 2024, that's the free cash flow you use as a basis for your terminal year?
Yeah, yeah.
Because then what is the big difference between CapEx and D&A there? Where does that come from? Because it seems like if you combine the difference between the CapEx and D&A and then the working capital, then you have a 500 million headwind in your terminal year, which would make an absolutely massive impact on your terminal value.
Can you...
yeah, so...
I didn't understand the question.
The CapEx there, how do you relate CapEx to D&A? How do you think about that? What's growth CapEx and what's maintenance CapEx?
Well, going forward, there is mainly the growth CapEx due to expansion in the new markets.
Yeah.
And so among the PP&E of TOMRA, we have predicted that the share of, for example, buildings and stuff has been going down going forward because of the growth,
great
expansion.
All right. Have you thought about what are the product cycles and the customer cycles and maybe how long do these products last? I don't know if there's a difference between the two segments. Can you talk about that? And perhaps additionally link that to your growth thoughts.
Yes, for collection, for example, there is a product cycle of 9 years. We can see that, for example, if you look at Germany, the initial placement of machines was around 2005, and the replacement took 9 years later in 2015. So this is the average life cycle of a collection machine. For the sorting segment, I would argue that it's somewhat lower, because they are more heavily used than collection systems. And therefore, they have a life cycle, I'd say, around 7 years. And you can see that pattern in the replacement. Yes, and linked to growth, I mean, of course, if you replace machinery more often, you have a higher growth rate. And that is also reflected in our DCF, where we have a growth rate of 10% for sorting and 8% for collection.
Until the terminal.
Until the terminal, yes.
Thank you for your presentation. Just a quick question here. Why do you think the share price is where it is today? What's the market discounting, or what's the market seeing that you don't?
Well, they are most probably overestimating the likelihood of expansion to new markets. And they might have gotten a bit overexcited from the replacement in Germany of the machines that increased the TOMRA's revenue, and also in Sweden that took place quite recently. So we do say that one key driver here is the market is just overestimating the likelihood of expansion.
And how, in your mind, what's the likelihood of TOMRA managing to expand?
Yes, I mean, there we also have to look at the different segments again. For collection, for example, it's very unlikely. As I said before in the presentation, opening a new market is a very difficult business. There are changing majorities in the political landscape. There are industries lobbying against it very strongly, so that is very difficult. And especially, as Fabian pointed out, the political landscape looks not very good at the moment across the world. For sorting, it's somewhat more likely that they expand because there is a higher food safety awareness, for example, in emerging markets like China and India, which will facilitate their business in a way.
And on the collection side, I mean, I don't think even I as an oil analyst have to admit that, there's a bit of a green wave across the Western world and parts of the emerging markets. And, it will have an impact on both collecting and sorting. Now, of course, politicians being politicians, they will listen to the public.
So despite the politicians being difficult, do you think it's likely that they will actually listen to the public and do implement some ways to counter all the plastic pollution to get more plastic recycling? Is that so unlikely?
I mean, I don't say it's not going to happen at all, but I mean, it's very difficult. It's a long process. It's a difficult process, and we still have a high growth rate for collection. It's 8%. That's something many companies can't achieve.
Mm-hmm. And yeah, you mentioned the green wave, which is part of the expectations that are quite high, which are included right now in the share price, as we think. And actually, if you really dig deep into what kind of materials can be efficiently recycled, because we, for example, have a downcycling, a recycling and an upcycling, which is different. For example, with plastic bottle, with PET, how it's called in many countries, there you have the real recycling, which it kind of makes sense to recycle this kind of plastic. But with many different other materials, there is no chance that you can achieve a or even an upcycling. So basically you, in many countries, you sort the glass for different colors. I don't even know if that's done here. But in general, after that is separated, you put everything together and use it in 98% of the cases for something completely different. That's why it is really limited on how much you can actually recycle. And due to that fact, there will be studies that could show, for example, from normal political lobbyists, it is in many cases not worth it and efficient to have such an implementation. And that's why it's not that likely that TOMRA even can more expand in that section.
Maybe one final question. In your forecast period, you show that TOMRA is very cash generative. What if TOMRA did a lot more acquisitions? They've done a lot in the past. How would that affect your target price and your conclusion?
Actually, in our conclusion, it's already included that they will have to further acquire companies in the sorting business to maintain their competitive position, because it is a really competitive environment. And when we look at the collection business, then they're not even allowed to acquire further companies, because that's due to the regulations and due to competitive law. So there they already have such a huge, large market share that just the competitive and institutions would intervene, that's for sure. Thank you.
Ja.
Hvor er slide?
Men hvilken? Måtte bruke mikrofonen? Okay. Hvilken da? Nummer 3 her, eller?
Den som her. Er ikke det du liker? Den som er høyest?
Den som er høyest lyd? Nei, men jeg trenger egentlig ikke mikrofon. Jeg er litt sånn en shouter.
You can do workouts with that because it's pretty heavy.
It felt heavy when you held
it.
Yeah,
it does.
I think we're missing a few people, so won't kick off yet. Er det godt å være ferdig?
Ja, det er rart.
Det var liksom no pressure da, Dite Mikkel var TOMRA-analytiker.
Already in the bar, or?
So everyone's so relieved. Okay, so I just want to say thank you for inviting me, and I think it's a privilege for me to sit here and hear all these smart students having a perspective on TOMRA. And I just want to say before I start that I have no view on valuation. I leave that with you experts. TOMRA, you know, what we really strive for is to make sure that we put the information out there that the market needs in order to make a qualified judgment of what we're worth. And in all honesty, we don't care whether you have a sell recommendation or a buy recommendation, because someone needs to sell the stock for someone else to buy it. Someone always needs to take a bet. It just creates liquidity. So, but I want to congratulate you all with a well run through presentation, all of you. And now I won't speak about TOMRA because clearly you've all read up and you know what we do. But I just want to take the moment, as we are all here, in order to spread a few points of awareness around what we're seeing now. And there's absolutely a change in how we think about materials these days. And there's also a huge, well, you're calling it a green wave. I just want to say, this is the circular economy. And the companies that can determine what kind of role they have in this play, they will have a competitive advantage. So it's not just TOMRA, but it's more companies that are out there doing smart things, cleaning up the environment. And so there's one very smart Dutchman, I think he has developed this machine in order to take trash out of the ocean. Good on him, good on him. These are the kind of companies we should be supporting. Now, this is not TOMRA's mission in life. I guess our mission in life is to make sure that the trash don't end up there in the first place. And to drop a bit of depressing statistics, but I think it's important that we all know what kind of consequences our consumer behavior entails. And every year you have 78 million tons of plastic, new plastic, that is getting produced every year. And you have 32% of this, approximately, that leaks out in the nature every year. And it's quite scary to see that most of the plastic that has ever been produced is still around in some shape or form. And by every year, you have some 7 to 8 million tons in the ocean every year. It's just dumped there. And then basically, then it's no one's responsibility. So I just wanted to bring across the fact that pollution and littering, it doesn't see any borders, it travels. And it's all of our responsibility to make sure that it doesn't happen. And I guess in my household, now we're only 4, but we have sort of, well, I have sort of taken the stance that we are not using plastic bags in my home, because what do you use it for? It lives for 15 minutes, perhaps, when you carry groceries back home. Plastic straws, completely banned. It lives also 15 minutes, 20 minutes, stays on the planet forever. Perhaps it's even a plastic straw in a plastic wrapper. What do you do with that? It's a big generation of waste that is completely unnecessary. Think about your coffee cup. Do you really need that one-time use coffee cup? It's paper on the outside, it's plastic on the inside, impossible to recycle, it's filling up our landfills, or it's getting incinerated, which is actually the worst enemy of recycling. So I just want to drop a few of those kind of, because it's pain points for recycling, and you all can do a small contribution to that. And perhaps we're thinking, okay, if I'm not using plastic bags and we're just 4 in my family, well, if I tell my friends and if I tell my family and they do it as well, that's where it starts. And I guess what we're also seeing is that the governments around, they listen to us as a consumer. And if we as a consumer demand sustainable infrastructure, they need to listen at some point. So I just call on you, everyone, because we are in the Western world. And the problem is not really in the Western world. It's in the emerging countries, new economies that don't necessarily have the means to put in place sustainable infrastructure. So when you travel, speak to people from different geographies, different cultures, do spread the word about how sustainable infrastructure can look like. So, and as it's the 8th of March today, I just want to call on you, because you have a responsibility to tell everyone how much fun you're having in choosing finance, because I've always been having fun in finance. And then looking at when I started in finance, nothing has changed. There's not a single more woman has come in, the ratio is still the same. So I call on you to spread the word. And I also talked to the representative from inside as well. She also chose finance. So good on you guys. So together. And with that, I just want to say thank you for spending the time on TOMRA. Spread the word.
Thank you very much, Elisabeth. Okay, I think we'll have Anders and Damiano and Tillen up on the stage for at least like Yannis as well, if you would like to join, just to take us a bit through what's the next step, especially for the winner. We don't know who that is yet, but just give us like 10 minutes, 15 minutes walk of what to expect when you take this global perspective, or a regional at least, from the EMEA.
Okay, so what a relief, you're all done. I think you I'm sorry for TOMRA, but it was our case last year that we hated our subject company all during our analysis, but then in the end you love it, right? And after... Yes. So it's like, it's really hard because last year we were very polluting, even though they were using scrubbers, we're still selling the case to up to date. But congratulations to all of you. You've done, I think, a really good job, all the teams. We could see how much effort you put, how much time you put it, and how much you believe in the company. Even though most of you have done a sell recommendation, but that's because of uncertainty. Of course, there is one group that didn't. But yeah, next steps. What to expect? It's going to be exciting. A lot of networking opportunities, and it's going to give you the time to build a team and to grow together, to learn more soft skills. And the competition is going to be even more intense to next one. You're going to be with the brightest team to the European, Middle East, and Africa. You're going to pass that, of course. We need to go back. That's the challenge for next year. And I think, even though I know that during everyday base, living almost with a person like Tillen, we could argue a lot. And then, of course. But then you stick as a team, and that's a valuable experience that you cannot get, I think, in university. Having this is like having a small internship. So when you go to a job interview, you actually know, listen to me, I know what I'm talking about. I don't know, Tillen. Whatever.
The superstars first.
No. So I think that the best that you can learn from here is that you cannot do everything alone. I know it's just 30 pages of a report. I know it's just a presentation, but someone has some skills that you do not have. Okay, either they are given by something, by God or whatever, or you develop them over time. And that's actually the point. So you learn how to coexist. And I think that was the best part of the entire competition, because every one of us has certain strengths and certain weaknesses. And for our presentation, especially, our strengths came up front, and our weaknesses were covered by other team members. And I think that's great, to learn how to collaborate with each other and to work together. And that's one point that Anders passed to us, is that, yes, it's numbers here and there. Yes, it's important to make a nice walk. Yes, it's important to have DCF and everything. But when you come together and you understand your business and you understand your case, and you actually argue with each other, and you're smart, and you develop an argument, you develop yourself, and in the end, you learn so much more. And I think that's the key. And if you really want to perform on a global stage, you have to come together as a team, not as individuals, because you won't win that way. And I think that that's the most important thing. If you come here to win, to perform, and that's the way to do it.
Yeah. No, and I guess being privileged enough to be a part of that journey, to actually see how you guys work together as 4 individuals, growing into one team, working on each other's strengths, building on each other's weaknesses, and helping each other throughout, from what you did in Denmark to what you did in Prague, and then going from the EMEA finals to the next day competing in the global finals against teams who've had actually 2 months to rehearse in between and make such a massive performance. I mean, it takes, I think it's the soft skills and what you developed there. That is something that you have to learn a bit outside academia. You learn all the tools from professors like Janis and then the team, but putting it all together and working together when there's no facts out there. You guys know that, you know, it's opinions, right? It's the future. None of us has a crystal ball, but you have to have some sort of logic, you have some views, you have to back them up, and then you have to pitch that case, and then you have to believe in it and kind of really show that. But you don't have a crystal ball. You don't know that that's going to happen or not. You're basically there saying that the market is out there, a bunch of investors are wrong. My view is right. And that takes a lot of courage, right? And then I think we've seen all the 4 teams here today doing an excellent job at that. And that's what you guys did an excellent job at as well. And you worked, like I said, from individuals doing that into a team that kind of had that conviction, that managed to convince all these practitioners who've been doing this for 20, 30 odd years at a very high level, that they actually believed in your case, they bought your case. And that's a massive, massive achievement.
Yeah, I think we should congratulate all 4 teams on job really well done. And, of course, we know it's a very difficult but rewarding journey to think about company, come up with a research report and figure out all necessary parts and wrap it up and actually format and write and discover that, well, 2 days left and our formatting is not to snuff and there's something goes wrong right before submission, and we all go through that. But it's a different skill set, right? And then you practice for a presentation and you probably will all agree that you grow as team, right? Especially last 1 week even, you would probably notice how tightly together you come and your presentation skills as team develop, that you're not individual anymore, that you really support each other. And then what do you expect going forward? One team will go forward, and we'll all cheer for that team. But we'll also, myself, I'll be extremely proud for my team. I'm really proud of what you guys did, and I think everyone will be proud for their own team, and as group, we're proud of what you guys have done. You're way ahead of your classmates by putting extra effort, by working double hard. Everyone has assignments and pressures and other deadlines, and you really have made an extra effort to learn and to put yourself ahead to transition from being in school and becoming professionals. What to expect going from here? I think you would have to kind of grow as team, tighten your story, tighten your thesis as much as you can, that your core points that you're trying to get across come through on every slide. And when our wonderful judge panel interacts with you and push you in different directions, not direction that you're comfortable, you come back with your core thesis in your report. And you deliver back that core thesis on judges' questions. Judges may disagree with you. You may disagree with the line, but you maintain your core thesis. Be flexible to expand boundaries, but always kind of return back. And those skills you really have to practice. Develop huge sets of supporting arguments and slides. It will help you, but also the core message, the core thesis. That's really big focus going forward. Yeah. Well, good luck to whoever has chance.
Just add one thing. You're referring to your comment about girls, that she's the only one in the team. We actually have to remember that we had also one. So apparently, the spread. She couldn't be here today, but she's really smart and she's really good. And we all know that. Yeah, that's a key asset for a lot of people, being very patient. But
and I think a couple of the late night sessions you guys had where there's a bit of disagreement, she was kind of the glue that kind of, made you guys not kill each other. Yeah. So I think, having that kind of maternal kind of capacity in the team as well is kind of good. Otherwise, it would be less of you on the planet today, I think.
And I think I spoke for Joao and Anastasia. They could not be present today, but I think all 4 of us, we would congratulate with you and your hard work again. I don't
Yeah, just one last point. I heard this from someone else, so it's not really mine. Winners adapt. So you get feedback, you adapt to it, you think it's a good feedback, you take it, you think it's bad feedback, you don't take it. But just don't be static in your approach. So if you win, you have 30, 40 more days, take them every day, 1 slide, 2 slides, improve them all the time. If you do it 1% better each day, you have 40 days. You know, it's a massive improvement in the end.
The return on your investment is really good.
So if you really want to perform, I think that, you know, step by step, and you do it like section by section. So you make small steps and you improve each and every day, and you adapt to it. So
don't do like Thielen sending emails at 3 a.m. because that could be a problem.
You never really finish, you never really complete it,
Yes.
but you run out of time.
Yes.
So you manage your time the most wisely to just make continuous improvements,
Yes.
like Thielen says, absolutely.
I think that's the way, and that's the best advice I can give you.
And take a note of what the judges have been asking. Because, you know, we've had the benefit of seeing all 4 teams, and there's a few things that keep on repeating, and I think it's, you know, like I said, you're basically saying that the market price is wrong. Then there has to be some sort of a trigger for you to kind of get to the value that you see. Keep in mind, you know, what would have to happen for your valuation to come through, and you know, just keep on thinking what would need to happen in order for my case to come through, and that I think that is one of the kind of key things I would say for all the teams. Because you're basically saying this price is wrong, my price is right, what would have to happen for your price to come through? Just keep that in mind when you go to Dublin and then you go to Kuala Lumpur afterwards.